Welcome back. At the Future Investment Initiative in Riyadh, Saudi Arabia, our own Maria Bartiromo was able to sit down with New York Stock Exchange President Tom Farley and get his take on everything from the Trump effect on the markets to the magnitude of the expected Saudi Aramco IPO.
And joining me right now is the president of the New York Stock Exchange, NYSE President Tom Farley. Tom, it's good to see you.
It's great to be back with you.
Thanks so much for joining us.
This beautiful hall.
The hall in Saudi Arabia. I mean, it's really incredible to me how many people in investment management, business people are here in Saudi this week.
Yeah, I mean, I was just waiting to sit down with you and impromptu was able to have a conversation with Secretary Mnuchin, Steve Schwartzman, Howard Marks. I mean, it's the great and the good of financing and finance all around the world.
Exactly. Now, one of the big reasons, obviously, is this Saudi Aramco deal. They're going to take their state oil company public. Could be the biggest IPO ever. Could be up to $75 billion. You had Alibaba, which was a $24 billion deal. This would be a huge piece of business for the New York Stock Exchange.
So, you know, people see me in the halls here as the head of the New York Stock Exchange. Everyone assumes that my relationship is solely about the Aramco IPO. I've actually known from the minister level to the company, Saudi Aramco, known the company for many years, long before the IPO was even a notion, because, as you know, New York Stock Exchange is owned by Intercontinental Exchange, the largest energy exchange in the world. I'm one of the managers of that business, and Saudi Aramco is a partner and a customer in that respect. Regarding the IPO, we'll compete for any IPO of a great global business. I can't say too much about Saudi Aramco in particular, other than anyone you meet from the company or the ministry, and I know you've met several of them just this week, they're professional, they're sophisticated, and no surprise, they're carrying out a very disciplined due diligence process to make the right decision for Saudi Arabia as a whole.
So you think you're going to get the deal?
I'm not going to comment in particular because I don't want to prejudice any decision that they make. But for any great global IPO, look, first of all, we want them to make the right decision for them. And we won't try to corner them into making something we think is the wrong decision. Clearly, the New York Stock Exchange is the leading exchange in the world for listings. We have something like 34 trillion of market cap. The next closest exchange is a tiny, tiny fraction of that. And so in terms of the deepest liquidity in the world, that's in the United States. Brand name, you get that at the New York Stock Exchange. It's also a rigorous governance test to be listed in the New York Stock Exchange. So if you list there, you're holding yourself out to be a very well-run, well-governed company. That's kind of the decision criteria, the benefits of what the New York Stock Exchange brings. But I have no doubt other exchanges around the world have their own unique benefits as well.
What are the implications of such a huge deal? I mean, if you're looking at Alibaba being the biggest deal at $24 billion, and this deal is as high as $75 billion, give us a sense, give our viewers a sense of why this is so important and what the global implications are for a company of this size to go public or to sell 5% of it to the public.
So large IPOs are nerve-wracking. You know, we do them a lot. Of the top 20 IPOs of all time, I think the number is 13 have been on the New York Stock Exchange. And even those companies that fall in the other 7, many of them have ultimately listed in the New York Stock Exchange. So we know a lot about big deals, and the New York Stock Exchange is purpose-built for those big deals. We combine humans and technology, but we still spend a lot of time getting ready for those IPOs because there's a lot of bids and offers that come in. There's a lot of complexity on that moment the stock opens, and you need to make sure that stock opens smoothly so that the management team of the IPO doesn't spend the next 6 months or 2 years explaining what went wrong on IPO day.
So let me ask you about what you're seeing right now at the New York Stock Exchange in terms of listings. Obviously, there's always been a massive competition between NYSE and NASDAQ. What can you tell us in terms of business year to date?
Well, apropos of our interview location halfway around the world from our normal home base, our shared home base, it's a very global story. The IPO market is booming in the U.S. and at the New York Stock Exchange. We've had twice as many twice as many IPOs as all of last year. We've had this year twice as much in terms of dollar value, and from all around the world. Last week alone, we had a great company from Southeast Asia, and we had another company from China. This week, we have an Argentinian company. Next week, a Brazilian company. And so we're seeing great global companies choosing the New York Stock Exchange.
Are you seeing more global companies relative to the U.S.? Because the truth is there are a lot of startups who are saying, you know what, I don't want to go public. The regulatory environment is too tight, and I'm not going to. So that's why there was a problem. People were wondering why the IPO market was not so busy earlier this year, that startups were not going public.
I'm glad you asked that. The American audience likes to make a big deal out of the story of, hey, not as many American tech companies are going public. And that's true. Some of the great American tech companies have chosen to stay private. But last week alone, we had a young man who started a company 3 years ago to provide a technology that allows for consumer lending in China. That company is now worth over $10 billion. It's an amazing tech story. And the Friday company, too, was a technology company that offers gaming, e-commerce, and payments from Singapore. We just don't talk about it as much, frankly, because it's not American. But these are great tech companies choosing to go public, choosing the New York Stock Exchange. Fortunately, I'm appreciative that they did choose the New York Stock Exchange.
Well, here's a stat for you. Listed public companies in the U.S. down 50% over 20 years because of the regulatory environment. I mean, the president has said he is calling for IPOs, the bar for IPOs, to be lowered. The Treasury came out with a report. They're basically saying the regulatory environment is way too hard for companies to go public. What are you doing in terms of lowering the bar, in terms of lowering the standard, making it easier for companies to go public?
I think you're referring to a press report that came out, and if you work your way down that press report, the next paragraph starts with some of the efforts that the New York Stock Exchange and I personally have engaged in to push the administration to make it easier to engage in IPOs. You mentioned the number of public companies. It is down by about half.
Yeah.
But the average market cap is up by over 3 times.
Okay.
The aggregate market cap. So the average company is 5 or 6 times bigger. The public market works great for big companies. It's not working as well for small companies.
That's exactly right.
And we need to acknowledge that because small companies are the lifeblood of free enterprise. They give inspiration to even smaller companies. They create jobs. So what can you do?
What can you do to get more small companies to go public then?
Simple things. The pendulum swung too far on regulation with Dodd-Frank and Sarbanes-Oxley. Big companies can handle it. Small companies can't. So you can allow small companies during the IPO process to meet more with investors and analysts. You can reduce the Sarbanes-Oxley requirements on small companies. Like, for example, not require an external audit for the first few years that a company is public. And you can extend that to all new companies, not just the tiniest ones, but expand the envelope a little bit and have it be for all new companies that are new to the public market.
Yeah, I mean, one thing is create a longer window of time in which companies can be in the emerging growth category.
Exactly. And what that emerging market growth category does is it just requires less regulation for small companies.
Yeah.
Regulation is like taxes. No regulation isn't the answer, and complete government control isn't the answer. Somewhere in between is the right answer, and the pendulum's going to swing. We have swung too far towards heavily regulating small companies, and we need to swing it back aggressively to make sure that that IPO engine is there for those young entrepreneurs.
What does the sentiment feel like to you when you go down on the floor, when you speak to big investors? Because how do you like the way the president is constantly tweeting that the market has seen $5.3 trillion in market value since Election Day? We're at record highs, 23,000 and counting. Do you feel like things are getting overheated? Do you feel the same sentiment when you talk to investors that you did a year ago?
I walk onto the floor and I look up at the indices every morning, and it's amazing what's happened since November.
Amazing.
It was 17,400 that night, if you remember, because the indices really cratered, and now they've zipped back up. However, I will note it's also a global story. This isn't just America. In the last 2 weeks alone, the DAX, the CAC, the Bovespa, they've all hit all-time highs.
That's incredible.
So this is a really good moment globally.
So do you feel like sentiment is still there, the bullishness, or are people getting worried that things are getting overpriced?
People are bullish. That doesn't mean there won't be a pullback, but people are bullish, without question.
All right, we'll leave it there. Tom, it's great to see you.
Great to see you.
Thank you so much.
Thank
Tom
you.
Farley is the president of the New York Stock Exchange.